Did you know that if you had invested just $10,000 in Warren Buffett's Berkshire Hathaway in the 1960s, it would be worth over $200 million today? That's the magic touch of the legendary Warren Buffett. Let's dive into his 7 crucial investing principles, especially pertinent in turbulent times. 1. Quality first. Warren emphasizes investing in quality companies, those with robust financials, a history of success, and a distinct edge in their sector. 2. Bargain hunting. The Oracle of Omaha is renowned for spotting undervalued stocks. For him, a great company at a discounted price is a golden opportunity. 3. Diversification. Spread your bets. Invest across various companies and sectors to mitigate risks and boost the odds of success. 4. The long game. Patience is Warren's mantra. He often holds stocks for years, even decades, trusting that good companies will triumph in the end. 5. No speculation. Buffett steers clear of market speculation. He bases his investments on a company's intrinsic value, not fleeting market trends. 6. Leadership matters. Strong. Competent leadership is a non-negotiable for Buffett. He believes the helm of a company plays a pivotal role in its success. 7. Contrarian approach. While many panic and sell, Buffett often buys. He capitalizes on market fears to secure undervalued gems, a strategy that has paid off handsomely over the years. There you have it. 7 timeless principles from one of the greatest investors of our era. In the world of investing, wisdom and patience often outshine quick moves and speculation. We're a young YouTube channel, so don't hesitate to subscribe.